Hello students, this is your Mr. GST who actually makes GST good and simple tax for you. In this video, we are going to cover CA Final Indirect Tax Laws RTP Jan 2026. We are going to discuss in detail, of course, in a very quick time, right? So now, coming to the point, sir, case scenario 1. Case scenario 1, I always tell before going to read the case scenario fully, please make sure you are reading the questions so that you will understand what information we have to gather from this case scenario. So first, let us go with the questions quickly. Sir, company can take ITC. Company can take ITC of how much on product to be procured by it as a merchant exporter. You know, on merchant as a merchant exporter, if you're acting, whatever the purchases you're doing, you will be paying tax at concessional rate 0.1%, that is 0.05% C, 0.05% is GST. So here let us see that. So here they have given how much. So 0.1% we can take ITC generally. Let us see that if you're acting as a merchant exporter. Next, if company does not export product D procured by it as a merchant exporter, till what date it cannot avail benefit of concessional rate under notification number. Okay. See, generally when you are buying some products, whatever it is, under concessional rate 0.1% and you are acting as a merchant exporter, if you want to receive that benefit of 0.1%, whatever you are paying taxes on the purchases, all that, sir, you should export the goods, whatever you have purchased, within 90 days, within 90 days from the date of invoice, actual date of invoice. That is the provision. Let us see here again. Next, which of the following statements is true with respect to product D procured by company as a merchant exporter? Shravan Limited can claim ITC on inputs used for manufacturing product D under GST law. The company is permitted to export product D on payment of IGST also. See, generally, when you are acting as a merchant exporter, you can export the goods only under LUT or bond. So, payment of IGST point will not at all come into picture. So, this is wrong, obviously. Next, Someone Limited can claim ITC on inputs used for manufacturing. Yes. Under GST law, the company is permitted to export product D only under LUT, not on payment of IGST. This seems to be correct. Seems to be correct. Someone Limited cannot claim ITC on inputs used. See, when you are manufacturing something and exporting, obviously you can take ITC. There is no restriction on ITC when you are manufacturing and selling. Correct? Exporting. Sorry. So ITC you can claim. So cannot claim ITC is absolutely wrong one. Someone Limited cannot claim ITC on inputs. Again, cannot claim ITC is wrong one. So basically, prima facie, I feel like option B should be the right answer. Okay, even without reading the question, we have understood that. Next, compute the value of zero rated supplies. Okay, for the month of January, that is important. Next, assessable value of machinery cleared for home consumption by Swadeshi Textiles. Okay, compute the value of exempt supplies for the month of January for the purpose of reversal of ITC. Okay, so for getting all these informations, yes, we have to go through the case scenario actually now. Let us go through the case scenario. There is a company called BCM Limited, public company registered in Uttar Pradesh. That is important. It is engaged in manufacturing product A, product B, and product C. And in this product A is exempt. So A is exempt. Fine. B and C are taxable. Very good. Okay. Company is engaged in making cross-border supply of taxable product D. So here we can say D is like used for exports. This is the story of 4 products they are dealing with. Okay. Next, procured domestically from local manufacturers. That means they will procure product D something from local manufacturers and they will export all that. Fine. Further, it is engaged in supply of consultancy services. Following information is provided by the company for the month of January. Okay. Now, the company manufactured product A and exported 1000 units of same worth 8 lakhs. Product A is exempt, but when it is exported, sir, it is export. So it is a zero rated supply. If you remember, there is a question, what is the value of zero rated supplies actually? So this is a zero rated supply. So how much? 8 lakhs. Okay. This is the advantage when you are reading the questions. First, you read the questions and come to the case scenario. Sir, while reading the case scenario, you will always get the information easily, tuck, 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 like that. You can gather the information required for the answers so that your time can be saved in the main exam. Next, company supplied product C value 35 lakhs to Dhriti Limited, Noida, Uttar Pradesh, including product C worth 10 lakhs supplied to SEZ unit. You know, zero rated supplies, exports and SEZ sales are nothing but zero rated supplies. Again, there is one zero rated supply here, that is 10 lakhs. Rated supply, super. Next, company imported specialized heavy textile machinery from China on 2nd January with the CIF value 50 lakhs, FOB value 53 lakhs. It sold the said machinery for 62 lakhs IC sales to Swadeshi Textiles, Delhi. Now, this fellow is importing something and making high C supplies. And high C sales are nothing but neither SOG nor sauce. Sir, when it is neither SOG nor sauce, obviously that will not come under zero rated supply. First of all, zero rated supply means it should be either exporting or SEZ supply. So, this is not a zero rated supply. Okay, fine. So, there is no GST implication also on that. Fine. While clearing the goods for home consumption, Swadeshi Textiles. See, if you remember, there is a question on Swadeshi Textiles. What is the uh, value, accessible value for home consumption, for the goods cleared for home consumption by Swadeshi Textiles? Okay. The Swadeshi Textiles have purchased it for 62 lakhs and filed a bill of entry for 63 lakhs. After clearing the machinery for home consumption, they sold it for 70 lakhs. Now, please understand this adjustment is what little bit very important adjustment, tricky adjustment for you all. What is that now? See, generally, when you are making a sale of a high C sale, sir, generally, what is the accessible value for the goods when the goods are sold on high C sales, when they are being cleared for home consumption? What is the accessible value for calculating basic customs duty plus IGST? The law is generally what is the last price paid during that high C sales. Okay. Now, the point is here on the high C sales, they have paid 62 lakhs. Generally, if the question is silent and the story is just there, you would have taken value of supply. But here they have also given extra information. They have filed a bill of entry. In the bill of entry, they are showing the value as 63 lakhs. Generally, you know, sir, it is self-assessment, correct? The porter will file the bill of entry declaring the value. Only the officer, proper officer gets any doubt, then he will verify that all that. So here when they are giving the bill of entry with a value of 63 lakhs, obviously the basic customs duty and IGST would have been charged on that on 63 lakhs only. I repeat, in the question, if they give the transaction value of high C and nothing other information, and they ask you what is the accessible value, then the last price paid by the person on high C sales who is clearing for home consumption. Here, Swadeshi Textiles is clearing for home consumption. These people, whatever they have paid, that alone will be as accessible value. But here they have also given another information, that is value in bill of entry. So obviously you should take it as accessible value. So here, if you see this option, this one, fifth question, 3 lakhs will be taken as the accessible value. Okay, that is what the point. Fine, super. Next one, what is next point? So the company also purchased product Z for 10 lakhs from Press Corporation Japan on 5th January and directly routed product Z for supply to Jinsing Corporation China. So this is also nothing but Schedule 3 transaction. Schedule 3 transaction. So where the goods are not reaching India, obviously what? Out and out merchant trading, you know this. Sir, this is neither stock nor sauce, it is not at all a supply. Okay, nothing to worry there. So this is also will not come, this will also not come under zero rated supply category if you remember. Sir, it is not at all supply, sir. You cannot call it as a zero rated supply. Next, company purchased product D as merchant exporter. Yes, we have discussed about this for 7 lakhs. Tax invoice dated 1st January from Shravan Limited. Manufacturer. See, invoice dated 1st January. And if you remember, there is a question within what time it should have been exported. Within 90 days from the date of invoice, we have seen 1st January. Sir, in Jan again, you have 30 days left out. Feb, you have 20 days. Understand, in this question, they have not given here actually. Here this is happening. You don't assume, sir, I will assume it as a leap year. Okay, don't assume the like exceptional cases. Assume only the normal things. Your assumption should be like not hypothetical. Okay, reasonable. Next, in March, you can take 31 days. So here it will be like total 89 days. So if you add April 1st, so then it will be the 19th day, 90th day, sorry. So 90 days is the deadline. So for April 1st, they should have exported this. April 1st of the next financial year. Super, that is the answer. Next. Continuing the question, continuing the point, fifth point here. Product D was removed on 2nd Jan from the premises supplied directly to a registered warehouse. Shravan Limited has procured inputs X, Y worth 1,60,000, all these things for manufacturing product D. Product D was exported by company to Gates Incorporation of USA. FOB of product D exported is 8,40,000. This 8,40,000 is nothing but a zero rated supply for us. 8,40,000. Okay, fine. Because exports, we are also calculating some question is there. No, what is the value of zero rated supplies done in that particular January month? Okay, 8,40,000. Next, did they ask anything regarding ITC? Value of exempt supplies, full value. ITC, how much you can take? Yes, there is a question on ITC. Let us see. Next. So if you see, there is a question on ITC also. Like if you remember, sir, on product D, whatever they are purchasing for 7 lakhs, what is the ITC available for them? Sir, 0.1% as we have discussed. We have to see first. This fellow is from which state we have discussed? This fellow is from Uttar Pradesh. Okay, and is purchasing product D from whom? Maharashtra. Okay, that means IGST obviously. So 0.1% IGST, that is 700 rupees should come IGST. Okay, so this is the option. IGST 700 is the answer for this. Next, so we have discussed that also. Next one, guys, understand here the important thing. Here there is some point for you to get confused. Shravan Limited has procured inputs X, Y, all these things. Here, yes, there are some purchases regarding this, but they have asked only for whom? Sir, company can take ITC on product D as a merchant exporter. That means they are talking only about this particular company, that is BCM Limited, how much ITC they can take. They are not talking about Shravan Limited or something else. Okay. So Shravan, next. So Shravan Limited has procured inputs X and Y worth, okay, for manufacturing product D. That is for Shravan. If you are asking ITC, that's a different story. But here they're asking about the other fellow, the company here. So please be careful here. We are not supposed to worry about Shravan's purchases and ITC. That is the another what a trick here. What institute has played with the MCQ. Fine. Next, what is next one? Company supplied consultancy services to its subsidiary XYZ located and registered in Florida, USA, and its branch office. Here, if you understand, sir, they said they are provided consultancy services to subsidiary company as well as a branch office. Subsidiary company and branch office are different. Please understand that. Subsidiary company is altogether a different person. Sir, whatever the services we have provided to them or whatever it is, sir, it is fine export. But to your own branch, which is located just in a different country, is not your it is nothing but your distinct person. It is not export of service. If you remember export of service definition, sir, is not merely an establishment or a branch office located outside India. Okay, so if it is just a mere branch located outside India, you cannot call it as export. So here for subsidiary, whatever they have given 12 lakhs consultation charges, that will become export, but this 24 lakhs will not become export. This is another place where you might do mistake. Please be careful. Your subsidiary company is different, or your own company. I repeat, Infosys Bengaluru, India is having Infosys New York registered in USA. It is a company incorporated in USA. Then it is altogether a different person. If you give some services to them, it is a export of service. But merely in New York, you are having just a branch, then it is not export of service. Please be careful here. So here, if you see now, we are calculating zero rated supply. Actually, how much the value is, right? So 12 lakhs we have to take. While reading the question, you should be very careful, because here most of the students will do mistake where the consultancy services to subsidiary company and branch office all together. Then they said simultaneously 12 lakh 24. Mostly what we will do, we will take 12 lakh 24 both as what export of service, and we will feel like okay, this is fully zero rated supply. No, it is not like that. Please be careful. Okay, that is the case. Next, company sold a future derivative contract at NSC, which was due in the month of January, 20 lakhs. That contract has no delivery option. If there is no delivery option, obviously derivative is nothing but what? Security. So security is not a good, not service. So this is not at all a supply. It's not a supply at all. Okay. So that is the point. Next, yes, all the rates are 6%, 6%, 12%. All the above figures are exclusive GST, all these things, fine. Next, PCM Limited makes zero rated supplies under a bond or annuity, fine. We have already solved answer for point A, B, sorry, first question and second question. Third question also we have understood, no relevant information. Yes, I mean, no contrary information for our answer. So Shravan Limited can claim ITC on inputs for manufacturing product D under GST law. The company is permitted to export product D only under and not on payment of IGST. Okay, yes. And if you see here, this part is related to Shravan Limited, and this part is related to company. That is the person BCM here in this question. Okay, because they are referring it as company from long time. Next, the value of zero rated supplies. Yes, we have made zero rated supplies here, full calculation. Let us see how much it is. Sir, it is 8 lakhs plus 10 lakhs, 18 lakhs, 10 lakhs plus 8 lakh 40,000, 6 lakh 40,000. More safe. Lakh plus lakh 40,000 plus 12 lakh. 38 lakh 40,000. 8 lakh 40,000. Here it is. Fourth one. 38 lakh 40,000. Right. Then the last one, compute the value of exempt supply made by the company in January for the purpose of reversal of ITC. You remember, for the purpose of reversal of ITC 42, 43, all these things, sir, what and all we have to take? Sir, we have to take generally the exempt supplies which are wholly nil rated, all these things. And if you see in these transactions, nothing is exempt, but here, so the only one thing is, and high C sales, all these things will not come here. Please understand, scheduled transactions, except that sale of land and building, is all these things, except that, sir, and sale of warehouse to goods, these high C sales, all these things will not come. So here, fourth point we will not consider, but transaction securities we will consider. Transaction securities we will consider for reversal of ITC, but there we will take value of that. What? How much? Only 1% of this transaction value. Okay, so 1% of that. So what is the value of exempt supply here for reversal of ITC? Now here only the 20,000 amount will come in. 1% of that 20 lakhs. Hope it is clear for you all, because value of exempt supply for reversal, wholly exempt, nil rated, non-taxable, and we can take schedule 3 transactions only, the land and building. Next, warehouse to goods, sale of warehouse to goods, but high C sales, all these things not be considered, but sale of securities also will be considered for the purpose of reversal of ITC, but the value is only 1% of the transaction. So 20 lakh is the transaction value on that 1% one. Remaining and all taxable supplies only, everything has been sold and tax paid, all that. And product A, it is an exempt product, but it is nothing but export, so you will not take it as exempt supplies. Okay, so it is a zero rated supply. So this is the answer for. So if you see, what are the options we got? A, what? A, 2 A's and all the B's. A's. For a second I was scared, like how can the answer be all like B? Okay, I thought I did some mistake. Okay, fine. Right. Let us proceed. Next, let us move on to case scenario number 2. Now if you see case scenario 2, I have actually simplified this all these things for us to save some good time actually. So first, as our practice, let us go with the questions. If you see here, the first MCQ is regarding, so they're asking you your aggregate value of inward supplies which are exempt under GST. That means you have to just tell what are your exempt purchases. Okay. In the next question, they're asking which of the following transactions undertaken by Kanpur and Agra units will fall under Schedule 3. That means they are talking about just Schedule 3 transactions here. Sir, if you see, even without reading the MCQ, you can case study, you can answer this MCQ. The first option, sale of agricultural land in the vicinity of manufacturing plant. One second. Right. So, sale of agricultural land is also yes Schedule 3 transaction. Sale of old factory building which is not used anymore. This is also Schedule 3 transaction. Sale of security is not a Schedule 3 transaction. Interest received on fixed deposit. This is also not a Schedule 3 transaction. So, option A will be the correct answer. Okay. So, 1 and 2. So, that is obvious. Simple one. Next, the value of inward supplies received by Agra Kanpur units retail showroom of Lucknow, all these things during the month, which is payable under reverse charge. So here they are asking purely, sir, what are the RCM purchases? Okay, simple. Next, they are asking time of supply for GTA services in the next MCQ, and they are asking about value of supply between Kanpur unit, Agra unit, and Punjab unit and Delhi. So value of supply for DP sales. So between the distinct persons, whatever the transactions happen, they are asking about the value of supply. That is what the question. So let us see the MCQ here. So here, while reading the MCQ, if you see here, the interesting part is that there is a company called Vision View Private Limited. So first thing, understand this fellow is a body corporate, okay, dealing with taxable textile products and is having units in Kanpur and Agra, both are in Uttar Pradesh, and also is having a manufacturing unit in Punjab and retail showroom in Lucknow, Uttar Pradesh. Retail showroom in Lucknow, Uttar Pradesh, and another retail showroom. So Lucknow, Uttar Pradesh. Let us mark it same. Another retail showroom in Delhi. And here there is a policy for the company. This is one important point. Obtaining single registration for all the places of business located in a state. That means if you see, sir, there is presence here in 3 states. One is Uttar Pradesh. In Uttar Pradesh, there are 3 things. Sir, one is Kanpur, the other is Agra, the other is Lucknow. But if you understand, there is only one registration for all these 3 things. That is what the company policy. And also company has a registration in Punjab. Punjab, they have the manufacturing unit. Okay, next, retail showroom in Delhi. So for Delhi also they will take a separate registration. So if you see, there are 3 registrations here, 3 registrations. Okay, this is the point we have to understand. Okay, now for the month of January, they have given the following details. Let us proceed. Now if you see, sir, I have also already understood, sir, they are asking about exempt purchases and RCM purchases. So this is sale of taxable goods. This information is just okay for us, not relevant. Purchase of taxable raw material. We want purchases which are exempt and which are RCM purchases. So this is also not relevant for us. Next, payment made for security personnel. So that means for supply of security services. This fellow is a body corporate. So if the supplier, if you see here, if supplier is a person other than body corporate, because this fellow recipient is a body corporate, then it will be RCM. So if you see, there is an information given here regarding this in point 1 below in the notes. They said Kanpur unit is making payment for security services to Guardian Shield Security Private Limited. That means here the supplier is also a body corporate. So obviously there is no RCM, it is FCM. But if you see Agra unit, it is paying for security services to Peacekeeper Security Solutions, a partnership firm. Supplier is not a body corporate here, it is a partnership firm. So this transaction is RCM. So that means here, sir, out of these 2 purchases, one is FCM purchase, the other is RCM purchase. Okay, this is the point. Fine, hope it is clear for you. Next, sir, freight paid to Fleet Wave Cargo unregistered GTA. Unregistered GTA, that means RCM purchase straight away. So both these are RCM purchases only. Okay, so both are RCM. Next, so that is the point number 3. Next, point number 4. So it is Fleet Wave GTA services from unregistered GTA. So obviously RCM, both the cases, yes, it is RCM. Next, freight paid to horse cart puller for intra-city transport of goods. See, transportation of goods by road other than GTA and courier agency is exempt. So this horse cart puller is not a GTA, not a courier agency. So this is exempt under GST. Okay. Next, loading and unloading charges paid to laborer, yes, taxable, but still this is a non-taxable person. No GST implication and not relevant in the question also for us. Nothing to worry. Next, payment to Swift Ride Services Private Limited for renting the Innova cars hired by senior officers of manufacturing unit. Please understand, here renting of cars, actually this is the purchase, but this is not RCM purchase, if you understand, because the supplier should be a, here cars are being taken on rent by the company, this is a body corporate, but the supplier should be non-body corporate, but here the supplier is Swift Ride Services, which is body corporate, hence no RCM here. Okay, no RCM. Next, rent paid to Lucknow Municipal Corporation for retail showroom. So rent paid to local authority by a registered person, sir, this is obviously RCM, sir. Next, interest received on fixed deposit, this is nothing but the supply provided by us to the bank, we are allowing bank to use our money, and it is exempt under GST, so this is an exempt sale. Next, fees paid to state government for certification relating to safety of workers. Such certification is statutory requirement for manufacturer. See, any certification for safety check, all these things for the workers, etc. So that is exempt under GST. So this is exempt. Sale of securities neither SOG nor SOS, that is neither supply of good nor supply of service. It is not at all a supply. Next, sale of agriculture land and old factory building. These are Schedule 3 transactions. We have already understood and we have answered that MCQ also before coming to this. And if you see the additional information, as I told, Kanpur unit GTA services and Agra unit GTA services, we have discussed about that. Adjustment 2 here is a very, 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 very important adjustment, because related to amendment in section 13 subsection 3, time of supply for RCM services. If you remember, sir, there is an amendment where time of supply for RCM services, sir, the amendment is time of supply generally for RCM services is 61st day from actual date of invoice or date of payment, whichever is earlier. But if the same tax invoice is issued by the recipient, sir, it is actual date of invoice or date of payment, whichever is earlier. So this particular thing is based on that, actually, if you understand. Sir, Fleet Wave GT Cargo has issued invoice for transporting the goods, the services on Jan 5th. But that is not relevant for us here, because GTA is an unregistered GTA under GST, so it will not issue tax invoice. So the Kanpur unit and Agra unit, what they have did now, please understand here. Sir, Kanpur unit made payment on 27 January, Agra unit made payment on March 28th. But the important information for us is tax invoices are issued by Kanpur unit and Agra unit for this on Feb 1st and Jan 29th respectively. So here recipient is raising the tax invoice. So 13 subsection 3, the amended one says, if the recipient is raising the tax invoice, at the time of supply is actual date of invoice or date of payment, whichever is earlier. So if you decode the information given below here, tax invoice is issued by the recipient. So what I have did here, Kanpur and Agra, clearly I have segregated the information. And Kanpur, when they are issuing tax invoice 1st Feb, when they are making payment 27th Jan, so the time of supply will be 27th Jan. Same way, Agra, when it is issuing the invoice 29th Jan, when making payment 28th March. So whichever is earlier, 29th Jan is earlier, so time of supply will be 29th Jan here. So again the amendment, everything I have written here properly for your revision. Latest amendment applicable for your exam, please be careful. Okay, that is what the point. So here for us, we have an MCQ here for this. If you see time of supply for transportation services provided by fleet, so here we have to see what is that, both are 27 Jan, 29 Jan only. So the option should be C here. Option C, Jan 29 and Jan 27. Agra unit, Kanpur unit. In my discussion, I have just written Kanpur unit and Agra unit. That's all. So this is what the answer for that question. So the time of supply for GTA services provided by Fleet Wave Cargo. Okay. Now the next one. Here, the next one is, so stock valued at 7,30,000 was transferred from Kanpur unit to Agra unit. Now, please understand, Kanpur and Agra both are having the same registration of Uttar Pradesh. That means both are not distinct persons at all. Whatever the goods transferred between them will not come under Schedule 1 transaction. Okay, so this is not a supply, first of all. This is not a supply. Next one, if you see, sir, stock valued 6,80,000 was also transferred from Punjab retail showroom to Delhi. Okay, Punjab different registration, Delhi different registration. The same was billed to Delhi for 5 lakhs. Actually, the value is 6 lakh 80, but you have billed it for 5 lakhs. And if you see here, sir, they have clearly given Agra manufacturing unit and retail showroom of Delhi are eligible for full ITC. When the recipient, in case of distinct persons, sir, when the recipient is eligible for full ITC, obviously whatever the value declared in invoice will be taken as open market value, and that will be taken as value of supply. So here the value will be 5 lakhs. Okay. So if you remember, there is a question on this actually. So the value of supply between distinct persons. This one, stock transfer between Kanpur unit and Agra unit is not a supply. Value of supply by stock transfer to Punjab to Delhi is 5 lakhs. So this is the correct answer. This is the correct answer. Hope you are clear with that. Next, so let me see the other questions. So we have answered 3 questions, I guess. 2 more pending. Exempt purchases. Exempt purchases. If you see, we have made a list of exempt purchases here. The exempt purchases. Exempt purchase. 15,000, 15,000, 30,000. And yes, this one 5,000 freight paid. So this is exempt. Guys, understand, loading and unloading charges paid to labor, nowhere it is exempted under GST. The only thing is the laborer are not taxable person, or they might be employees. So that will not have any GST implication. So total 35,000. So you have an option of 35,000 here. Yes, the answer is 35,000. Next. Yes, sir, there is a question on RCM purchases. What is the value of RCM purchases? So unit wise here, if you see, they have given Agra unit, Kanpur unit, and the retail showroom. So 3 things, let us take it clearly. So exempt purchases, if you see, sorry, RCM purchases. If you see in the next page here, no RCM purchases are there. It is only here. So RCM purchases, this is RCM, 1,10,000, 40,000. This is also RCM. Okay. So this is RCM. This is also RCM. This is RCM. So if you see in this total box, it is 3,20,000. In this total box, if you see 35,000, and in this total box, if you see 1,50,000. 320, 35, 1,50,000. 320, 35, 1,50,000. 320, 35, 1,50,000. 320, 35, 1,50,000. So option D. Okay. So this is what the answer for that. Hope it is clear for you. And one last another small MCQ here regarding customs. So what is that now? Rajesh, an importer, cleared shipment of electronic goods. After clearance, he realized that duty paid was less than the actual due. That means he has paid less amount than what is actually due. Okay, super intelligent fellow. Because of some clerical error. Now he wishes to revise the entry to correct that. Okay. However, recently the customs department initiated an audit and informed Rajesh about it. Rajesh wishes to voluntarily revise the entry details at this stage. Now please understand, when the customs department has initiated the audit and it has been already intimated to the taxpayer, now he cannot revise that. Okay. So which of the following statement is most appropriate in this regard? Yes, Rajesh can revise. Wrong. Yes, wrong. No, a revision of entry is not allowed once an audit or such action has been initiated and the importer has been intimated about that. Yes, this is what the correct one. Just for safety, let us read the next option. No, Rajesh must wait for the. Okay, so this is most appropriate option. C is the most appropriate one. Okay, with this we are done with the MCQ part. Let us see the answers. So just to justify our discussion, D, A, D, C, C, C. D, A, D, A, C, D, A, D. Dad, triple C. Dad, triple C. D, A, D, C, C, C. Let us see. Okay. D, A, D, C, C, C. So with this, we are done with the MCQs part. Okay. So if you see the next one, question number 13, actually, I have simplified this question for you so that like our discussion time will be reduced drastically. See, any question when you are reading, actually this 14 mark question kind of thing actually, but not that much worthy like in the main exam, but still okay, fine. So we have to understand who is the person. Sir, as I already told you, sir, this fellow is a body corporate, 1 point supply, private limited, body corporate from Maharashtra, and this information is purely regarding month of April. They are asking everything regarding April month. Okay, so be careful there. Now they have given outward supplies 4 points and inward supplies 3 points they have given, and they're asking you, sir, if the GST rates are 9%, 9%, 18%, they're asking you there is no opening balance of any ITC, all that. They're asking you two things here that is important in this question. Minimum net GST liability payable in cash using e-cash ledger, and also using IceGate portal of customs. So through IceGate portal of customs, how much GST we are going to pay. Both the things we have to calculate here. Hope it is clear for you, right? So these are the two requirements in this particular question. Very simple one. Let us decode the information. See, when they are asking minimum net GST payable in cash, always understand our answer will have 3 steps. First thing, you should calculate gross GST liability. Second thing, you should calculate the ITC available. Third thing, you should calculate the set off. So for calculating the first step, gross GST liability, you should decode the sales information, and for calculating ITC, you should decode the purchases information, and final step is set off. Simple one. Okay, any problem, no matter how much lengthy it is, how many marks it is, how much complicated it is, if they are asking you what is the minimum net GST payable in cash, make sure you are following these 3 steps. One is gross GST, that is output tax. Number 2, ITC. Number 3, set off. Here in this question, they itself gave you the clear information. These are sales, these are purchases, like that. They have bifurcated and given here to us. So let us proceed. The first sale, if you see here, this is supplied consignment of 50 power drill kits to Messrs. Bill Pro and Sons in the state of Maharashtra at the instruction of Tool Mart of Tamil Nadu. So they are giving it to Bill Pro of Maharashtra on the instructions of Tool Mart Tamil Nadu. That means, as per the place of supply provisions, section 10(1)(b), the place of supply will be Tamil Nadu here. So it is interstate sale. This is interstate sale, and on the 6 lakhs you will charge 18% GST. That is IGST. Okay. Next, supply of silk yarn. This is one interesting point here. Listen, you are selling silk yarn to Silk Aura, which is nothing but unregistered under GST, and invoice address is Nasik, Maharashtra. First thing, because the recipient is unregistered and the address is also available. Sir, this is like nothing but place of supply is Maharashtra only. So it is intrastate sale. But the very important point is, the moment we see silk yarn, we'll think about the RCM transaction. The RCM will come only when the recipient is registered. Here, Silk Aura Creations is not registered under GST. That means there is no RCM. That is very, very important one here. We should be careful. Yes, this is intrastate supply. And here, RCM will come only if the recipient is registered. But here, this fellow, the recipient Silk Aura Creations, is unregistered under GST. So no RCM. So the liability is on this particular supplier only. Okay. So that is what the point. So on 4 lakhs, we will charge 9%, 9%. Even when you are solving the question in the exam, please understand, have pencil and eraser with you. Please keep writing next to this left side or right side columns. Make this type of working notes, all these things. So when you are doing the solution, it will be literally helpful for you. Once the problem is done, you erase this, no problem. Next, this is another interesting part here. Provided complimentary training at Kalyani Village Resort, Mumbai, Maharashtra, to its agents within Maharashtra on effective handling of customer queries. How to handle the customer queries? They have given training to their staff, to their agents actually, in Mumbai, Maharashtra itself. Here, the word complimentary training is very important. That means it is free of cost. So, whatever the amount they have given, 9 lakhs is utter waste here actually. Please understand that. So, even I can say like the framing of question would have been a little bit better here, free of cost. And I can see here they said complimentary training in amount column, they give 9 lakhs. So, student will literally get confused. Then they will think, okay, agents have paid 9 lakhs consideration. They said complimentary training here. So, it is free of cost. Please be careful here. Right? Yes, I agree. Question could have been framed little bit better. The sentences here would have been little bit better. Fine. So here no consideration. Sir, when there is no consideration, below they have given, sir, the open market value of the said service is 2,60,000, like, kind and quality 2,50,000. Rule 29 regarding open market value or 90% of the like, kind and quality, all these things are relevant only when the goods are supplied to agent. But here we are giving services. So this information of open market value, all these things is not applicable, because rule 29 is not applicable for services. Not only that, sir, here complimentary training means it is without consideration we are providing. No consideration, no supply. Schedule 1 para 3 we can bring into picture supply between principal and agent only if it is goods, not in case of services. Here it is services, so again schedule 1 para 3 also not applicable. Para 2 however not applicable because these people are not related persons. So here straight away it is no consideration, no supply, so no GST implication here. Okay, this is what the information. Next, transfer the tenancy rights in a commercial building in Mumbai to some fellow Nexus Source Limited, whatever it is. Stamp duty and registration fees have already been paid on the tenancy premium. There is a clarification, if you remember, sir, tenancy premium, the transfer of tenancy rates, Pagadi system, whether you are paying stamp duty, registration charges or not, all these things doesn't matter, sir. It is renting of immovable property, it is supply of service only. Okay, so it is taxable and it is intrastate. Of course, the company is also from Maharashtra. This place of supply related to immovable property is also Mumbai, Maharashtra. So intrastate transaction, so you will charge CGST and SGST. Okay, so we have decoded full sales information. Now let us decode purchase information. And purchase, if you see, this fellow has imported Bluetooth speakers from Korea. The goods landed in Mumbai port and reached its registered premises on 30th April. That means you have received the goods also, you can happily take ITC. First thing you should understand, when you are paying IGST on the goods imported, obviously ITC means you can take not only the taxes paid on local India purchases and sales, purchases made in India, but also the imports. Yes, you can take. When you are importing, you will pay basic customs duty and IGST. IGST is very much eligible for ITC. So here, and the goods also reached the recipient, so he can take ITC. The only thing is on 4 lakh, because it is now, it is nothing but interstate transaction, obviously, correct. So on that 4 lakhs we will charge 18% IGST, that can be taken as ITC, no doubt. So remember, import of goods, yes, you can take ITC, don't get confused. Now the another interesting part here is the participation fees paid for business exhibition held in Germany organized by Dhwani India Limited. Dhwani India Limited is organizing some business exhibition in Germany, means for the event happening in Germany, whether they will collect Indian GST? No. That means, sir, there is no GST implication at all here. Are you understanding the point? Same way, salary paid to employees on rolls. Sir, no GST implication at all, sir. On these two transactions, there is no GST. So, because it is no GST, obviously, I have not paid GST on these things and I will not take any ITC. Okay, that is what the point. And finally, the last one, simple one. Consumables procured from registered suppliers located in Gujarat. This fellow is from Maharashtra and the supplier is from Gujarat. So obviously interstate transaction. Here they said, sir, this includes, this 1,50,000 includes diesel worth 75,000 including excise and VAT, all these things. So that means out of 1,50,000, only 75,000 is nothing but the supply. Okay, on 75,000, 18% IGST we would have paid and we can take it as ITC. So now what I do is, see, simple. Once you decode the information like this, it is all about posting the information. As I told you, I prepared everything here already ready, because to save some time for you. See, understand, as I told you already, step 1, calculation of gross GST liability. Follow this format, don't worry, just follow this format. Particulars, amount, IGST, CGST, SGST. Generally in ICA suggested answers, they will use CGST, SGST and IGST, but I go with IGST, CGST, SGST because your first agenda is to make IGST, ITC balance under 0. Okay, so that is why you make it that way. So particulars column, amount column, IGST, CGST, SGST. I have mentioned the rates also on top because all the rates are same. Now, first point, particulars, 50 power drills. You can give the explanation here, place of supply, all this reasoning and all. See, in the particulars column itself, please make sure you give the reasoning for whatever the adjustments you are doing, so that it will be easy for the examiner to understand. For you also, you will save some time and also you will not forget to write the working note. So, 6 lakh is the amount, IGST I am filling, and no CGST, SGST. Still can, again, the explanation for this, what and all these things, no RCMY because all that. So, you make there an amount, CGST, SGST. Complementary training, again the reasoning below there itself, in the particulars column itself, reasonings we have discussed, write down the same reasoning. Amount column, sir, no GST implication, so 000. Tenancy rights, again you can write down regarding the clarification, no matter whether the stamp duty and registration charges are paid, it is transfer of right to use the immobile property, hence it is supply of service and taxable. So you can write that way and you can just see. So total, if you see, so total output tax is 1,08,000, IGST, CGST, everything 1,08,000, 1,08,000, 1,08,000. Right. Now, step 2. Step 2 is obviously, as I told you, calculation of ITC. ITC also same story. Decoding the information, particulars column, write down the reasoning, all these things. So 4 lakhs you have paid for importing the goods. You can take it as ITC, 72,000. Participation fees, salary. As I told you, the reasoning and all we write here. and you just mention here. So total ITC, if you see, it is only IGST 85,500. So CGST, SGST is 00. And final step, the last step is set off. And set off, if you go, sir, set off, first thing we'll go with output tax numbers, IGST, CGST, SGST. Input tax, here set off is not that greatly difficult because you have only IGST, ITC, and that to 85,500 only, and liability is 1,08,000. So obviously everything will be set off, still the payable will be this much. Okay, set off here, it is very easy. And as I told, sir, in the question there are two things generally. Till here we will do the answer and we will just leave it. But sir, there is one more thing in the question. You should not forget. You should show this separately. For the goods you have imported, the Bluetooth speakers, sir, 4 lakh worth. On that IGST 72,000 you would have paid through IceGate. Okay. So that also you show here. So the answer is done and dusted completely. Hope it is clear. Okay. So this is the way you solve any question with respect to minimum net GST payable. So the next one, if you see, right. So the 14th question, again I have simplified this and I give the answer fully. Just let us discuss on this. Zenith Chemical and Allied Limited is a diversified Indian conglomerate dealing in specialty chemicals, all these things fine. Here, over the years, it has established production, trading services, all fine. It is present in multiple states, that is important here, and it has taken ISD registration in the state of Kerala. And they are giving complete information regarding a particular month, and they are asking you how much ITC can be distributed to these people. Just a question on ISD distribution of ITC. Okay. So relevant month turnover also they give Mumbai, Bangalore, Hyderabad, Trivandrum. So turnover 12 lakhs, 60 lakhs, 36 lakhs, 72 lakhs. I have given here ratio also 1 is to 5 is to 3 is to 6. There is the ratio or they are in the according to their turnover. Total ITC of input services available during the month with the ISD includes CGST, SGST, IGST, everything. So total ITC available is 48 lakhs. We have to distribute that. Out of this, ITC on input services exclusively to Bangalore unit. Out of this 14 lakhs, exclusively to Bangalore unit, you have to give to only Bangalore unit then. Sir, ISD is registered in Kerala. For Bangalore, Karnataka, it will transfer entire credit in the form of IGST. So, for Bangalore, entire 12 lakhs we will transfer in the form of IGST. Okay, fine. Next. So, this is IGST transferred. And out of the above 6 lakhs, that is CGST, SGST 3 lakh each is belonging to both Trivandrum and Hyderabad units. So when it is belonging to Trivandrum and Hyderabad units, you should transfer to those units in their turnover ratio. If you take Trivandrum and Hyderabad turnover ratio, Hyderabad 36 lakhs, Trivandrum 72 lakhs. So it is Hyderabad 1 and Trivandrum 2. So 1 is to 2 ratio we can split. So if you take, that means here please understand, out of this 6 lakhs, two parts, that is 4 lakhs should come to Kerala, 2 lakhs should go to Hyderabad. So 4 lakhs when it is coming to Kerala, because ISD is also in Kerala, CGST, SGST, this ITC also CGST, SGST, ITC only, 2 lakh, CGST, SGST will be transferred to Trivandrum unit, 2 lakhs straight away IGST will be transferred to Hyderabad unit. So Trivandrum unit, CGST 2 lakhs, SGST 2 lakhs, Hyderabad IGST 2 lakhs. Next, rest of the credit of input services available is allocable to as common credit to all the units which is received from local suppliers. That means out of this 48 lakhs common purchases, 12 lakhs, sorry, not common purchase, out of that ITC, 12 lakhs is given to one fellow, 6 lakh is given to another fellow, balance 30 lakhs. Balance 30 lakhs, if you see, this is from local purchases in Kerala. That means it is CGST 15 lakhs, SGST 15 lakhs. So 30 lakhs is there. This belongs to all the units. So this has to be split in the ratio of 1 is to 5 is to 3 is to 6 here. Okay. The order how I made the answer is different. So don't worry about the order. But we are splitting that. So in that, if you take that ratio, sir, 6 lakh CGST, 6 lakh SGST will come to Kerala. 2 lakh IGST will come to Mumbai. 10 lakh to Bangalore. 6 lakhs to Hyderabad. All other units IGST only, but Kerala unit Trivandrum, it is CGST and SGST, because they said the balance purchases are from local purchases Kerala, so they would have paid CGST and SGST there. Okay, that is the reason. And we are splitting this 30 lakhs in the ratio of 1 is to 3 is to 5 is to 6. Okay, or 1 is to 5 is to 3 is to 6, whatever it is. Okay, 1 is to 5 is to 3 is to 6. and the order how you are presenting these branches in the problem is what matters. Okay, nothing to worry. Now, basic value here, one small mistake what you will do now, please understand, in this outer column whatever they have given 50 lakhs, this is the value of the debit note. It is not GST amount, it is value of the debit note. On that 12% IGST is there. That means 12% IGST means it is 6 lakhs. Okay, this belongs to again all the 4 units. This is related to some last month whatever it is debit note they have given. So obviously ITC will increase because of debit note. This 6 lakh also you should distribute in ratio of 1:5:3:6, and this is IGST. So for everybody it will be IGST only. For Trivandrum it is 2.4 lakhs. For Mumbai it is 0.4 lakhs. For Bangalore it is 2 lakhs. For Hyderabad it is 1.2 lakhs. We will split. Total 6 lakhs. 2.4 plus 0.4 2.8. 2.8 plus 2 4.8 and 1.2 6 lakhs. Totally we have spread that. Okay, next in the particulars column here you can make this particulars column and you can give the reasoning what is this credit all about, like that. Okay, next, sir, there is a credit note also. Credit note received for the month applicable exclusively to Trivandrum. Again here the value is 118 lakhs inclusive of GST. GST rate is 9%. 9%. It is from Kerala only, CGST, SGST. So 9 lakhs plus 9 lakhs. This is the reversal amount. So here ITC is not increased, it is decreased. So we have to reduce the apportionment of ITC to Kerala, 9 lakhs, 9 lakhs. So I am just adding negative figures here, 9 lakh, 9 lakh. Okay, that is how you apportion the value. And here you will get all the branches 0, 0, 2.4, 0, 0, 24 lakh, 0, 0, 9.2 lakhs. But for Trivandrum you will get minus 1 lakh, minus 1 lakh and 2.4 lakhs. That means CGST, SGST there is negative balance. That means, sir, you should add these things to the output tax liability. Okay, you should add this to output tax liability. Okay, that is how we will solve that particular question. Hope it is clear. Purely this is regarding how do you apportion the ITC. Fine. So if you see the next one, what is the next question here all about? See, this is Archie-Space Designs Private Limited, which is referred as Archie-Space, okay, from now, and the Sky Infra LLP. So let us call it as Sky Infra from now, Skyview, sorry, Skyview from now, entered into an agreement in June to provide architectural services. Skyview paid advance 2 lakh on 15th May for the provision of said service. However, before Archie-Space could render the architectural services scheduled to be supplied in June, that means advance received, yes, 2 lakhs. The contract was cancelled on 25th May due to some legal permissions. Okay, so this is first regarding the architectural services you have paid advance. Okay, but later on the contract got cancelled and the service is not rendered. Okay, Archie-Space has already issued an invoice for the advance in May and has paid the applicable GST on the advance amount. As its tax consultant, you are required to advise whether Archie-Space is eligible to claim refund of GST already paid on the advance or whether it should adjust its liability in its GST return. See, generally when the advance is received, we will give something called a receipt voucher, and if it is refunded without raising invoice, we will give a refund voucher. But here invoice has been already raised. Because invoice is already raised, and when there is any service, the contract is cancelled and the service is not going to be supplied rendered, obviously we can raise credit note, and that credit note can be given or declared in GSTR1 while filing. So automatically its GST liability will come down, and you have a deadline of 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier. You have that option to proceed with. So you can happily proceed with that option. If you don't have any GST liability, then yes, you can apply for GST refund of that. Otherwise, yes, you can proceed like this. Simple question. So the next one, Mr. Vikramaditya Rao, a registered supplier under GST in state of Gujarat, engaged in providing financial consultancy services across various states in India. Okay, he made several taxable supplies during the month of April. 18th April, he collected IGST 15,50,000 from his clients for the services rendered. However, owing to the internal accounting delays and the system migration going on in his firm, Mr. Rao failed to deposit the said tax amount within 30 days from the due date of payment. No show cause notice has been issued by GST department until that time. Before any such notice could be served, Mr. Vikramaditya Rao, upon reconciling his accounts, voluntarily decided to discharge his outstanding tax liability. He believes that if he has decided to discharge tax liability, okay, he believes that if the tax is paid before the issuance of show cause notice, no penalty would be levied and only interest, if any, would be payable. According to Mr. Rao self-assessed tax liability is 15,50,000 and it was paid on 26th June. You are required to determine under the relevant provisions of GST law and rules thereunder, of course, the interest and penalty, if any, payable by Mr. Vikramaditya Rao in this case, assuming that he has not opted for quarterly return monthly payment scheme. Okay, fine. Now here, please understand, this person has collected something. So he has collected the tax amount actually 15,50,000. Here the important word for us is, sir, collected IGST 15,50,000. This is for 18th April, correct? So that means this is happening in the month of April. For this, the due date is 20th May. But he is making payment on 26th June. Okay. So 26th June he has paid. Correct. So 20th May is the due date. That means in May, so still there are 11 days. June, 26 days. So total, if you see, there are 37 days delay actually. First, let us focus on interest calculation. So we are supposed to see what is the interest and what is the penalty. First, interest one, if you see, the interest is nothing but 15,50,000 is the tax, and interest 18% into 37 divided by 365. Okay, so that is what the point. So if you see, 15,000 into 18% into 37 divided by 365, 28,282.19. Of course, you can round it off to the nearest rupee. 28,000 28,282 rupees. Okay, this is with respect to interest. Okay, now the interesting point here is regarding the penalty. Sir, he believes that if the tax is paid before the show cause notice, penalty need not be paid. Understand, there is a section 74A which is applicable from financial year 24-25. Sir, please understand, as per that section 74A, sir, it clearly says if you have not paid any self-assessed tax or anything which you have collected in the name of tax to the government within 30 days from the due date of payment. That is what they have already given the hint here in the question itself. The tax amount within 30 days. He failed to within 30 days from the due date of payment. Please understand that. That is what the point. So if you don't do that, obviously penalty will attract. So it is 10% of the tax or 20,000. That is 10,000 plus 10,000 CGST and SGST. Okay, whichever is higher. Okay, so now if you see the tax liability is 15,50,000. That means on the 10% is 1,55,000. Correct? What is the amount now? Right? That is what the point. So that 1,55,000 or 20,000, whichever is higher. So 1,55,000 will be the penalty. That means interest amount here is nothing but 28,282. Penalty amount is 1,55,000. Okay, that is what question number 16. Okay, let us move on to next question, question number 17. So here, the next one, question number 17. Sing Sang Limited, a registered company under GST law in the state of Uttar Pradesh, okay, engaged in business of manufacturing and supplying electronic musical instruments. The company has an office and warehousing facility in Noida, Uttar Pradesh, okay, from where it carries out business operations and maintains all accounting and GST related records. Okay, fine. Now, on 10th July, Sing Sang Limited received a notice for audit from Jurisdictional Tax Authority under Section 65, that is departmental audit. Sing Sang Limited submitted all the records, books of accounts, supporting documents, everything on 25th July. Super. Subsequently, tax audit team visited the premises of Sing Sang Limited in Noida on 8th August for conducting the audit. Okay, determine the time limit within which the audit must be completed, assuming no extension. Simple. So when the departmental audit has been completed, sir, it should be completed within 3 months from the date of commencement of audit. But the interesting thing is, sir, when the audit has been commenced, for that we should see when the taxpayer has submitted the relevant documents, all these things for the audit, or the date actually when the department has carried out started doing audit at the premises of the taxpayer, whichever is later. So in this case, they gave the details on 25th July. They came to the premises and started conducting the audit on 8th August, which is later. 8th August is later. So from that, within 3 months, they have to finish this. Okay, that is what the answer. Fine. So let us move on to the next question, question number 18. And if you see the next question, there is Mrs. Global Machines Private Limited, an importer based in Chennai, imported consignment of specialized steel rods in May 2025 for manufacturing high precision auto parts. Since the company does not have the required machinery for cutting and shaping, they're sending these rods to local job worker, Messrs. Sharp Tools and Co. same day during under a delivery challan and e-way bill. Of course, while sending the goods, they're using delivery challan and e-way bill because there is no sale happening, no tax invoice is raised. By mentioning the description, quantity, all that, the job worker maintains records of receipt, the processes carried out, and the scrap generated. However, due to delays in production schedule, the rods remain with the job worker till June 2026. Upon inspection by the jurisdictional customs officer, the importer is unable to establish proper utilization of the rods as per particulars furnished earlier. Based on the above mentioned information furnished by Messrs. Global Machines Private Limited, you are required to answer the following questions based on customs import of goods at concessional rate of duty or for specified purposes rules 2022. Okay, first, what is the maximum time limit for which goods can be sent for the job worker? Has the Global Machines Private Limited complied with the requirement? Now, please understand, they are sending the goods to job worker in May 2025. Generally, as per the rules, yes, that goods imported for some specific purpose, all these things can be sent to job worker, but that can remain with job worker maximum for 1 year period. Here, it is there with the job worker till June 2026. So, it is May 25 and June 2026. So, it is more than 1 year. So, global machines have violated the condition. Okay. Discuss whether the importer shall be responsible for ensuring that the said goods are used in accordance with. Of course, the importer is responsible for that. Okay. Next, what record keeping responsibilities does the job worker Sharp Tools and Co. have in this case? Here, for you, if you have observed the question carefully, here in the question itself, there is the answer. They have to maintain the records of receipt of the goods, what are the processes, manufacturing processes carried out on them, and finally, any scrap has been generated while manufacturing all these things, that they have to maintain the details. Okay. Next, if part of the process dots need to be sent to another job worker for further finishing, which document must accompany such movement of goods? Obviously, sir, because you are sending this to another job worker for further processing, obviously you should send it under e-way bill, and for e-way bill, obviously you need a supporting document, that will be delivery challan. Okay, that is what the point. Next. So if you see the next one, question number 19, some theory aspect or a theory related question. Once we discuss, you just also read the answer in detail actually. Central government is in the process of drafting an amendment to foreign trade policy. During this process, it is circulating a draft to the stakeholders for consultation and their feedback, all that, and provides them 30 days time for feedback. Global Exporters Association is giving their suggestions, and the same government is acknowledging, yes, we have received your suggestions, but in the final amendment, these are not accepted. These recommendations or suggestions are not taken into picture or not taken into account, and GEA is requesting government to explain why. Ministry also is providing a brief explanation stating that acceptance of the suggestions would conflict with India's international obligations under trade agreement. Not only that, separately another association, Fresh Food Exporters Forum, also submitted views. Their suggestions were not incorporated, and government did not provide any reasons for the rejection. Now, you are required to answer the following based on the above information. Okay, what is that, sir? Central government obliged to always consult stakeholders before formulating or amending FTP? Not at all. Central government, whenever they feel it is necessary to take the recommendations or suggestions or feedbacks of the stakeholders, it can consult, or otherwise it can suo moto frame the law or bring any amendments to the foreign trade policy. Okay. Next, Whether action taken by government for rejecting the proposal of GE and giving only limited reasons was valid, explain with brief reasoning. See, understand, central government doesn't have any responsibility or doesn't have any obligation to give reasoning why it has been rejected. So as far as they consider it is reasonable, okay, we'll disclose them what is the reason why we have rejected that recommendations, they can disclose that. Otherwise, they need not do that also. Next, I repeat, once this answer is discussed, you also read the answer carefully, clearly once, little bit lengthy theory answer. So just go through that once. Next, can this food forum, something like that, whatever it is, can it demand government to legally disclose the reasons for not accepting its feedback? Also list the situations where the government is not required to provide reasons. As just now we have discussed, government doesn't have any obligation to disclose the reasons, and if any case where it is related to the national security, or it can be like adversely affecting India's relation with the foreign countries with respect to trade or anything, or with respect to, if anything, it is confidential information, all these things, sir, the government can decide not to disclose the reasons. Okay, that is what the point. Yes, so that is what the reason. And please go through the answer once, read line by line carefully. If question is tested, you can frame the answer properly. Okay, you know the concept. Just for framing the answer properly, please read the answer once after this video is over. So the last question in this, of course, a problem from customs actually. So a easy problem again. Blue Crest Machinery, a manufacturing firm in India, imported machine from UK supplier in May. FOB value is 10,000 UK pounds. Air freight incurred 3,000 UK pounds. Here itself you can understand. See, generally when air freight is given, it should not be more than 20% of the FOB. Here the FOB itself is 10,000 UK pounds now. Sir, here they are saying 3,000 UK pounds. So we have to make an adjustment regarding that. Further, buyer was required to pay license fees 400 UK pounds. Moreover, the firm has paid a buying commission of 20,000. See, first of all, coming to this license fees, sir, license fee, when it is a condition of a sale, obviously that should be added to the FOB value, and the buying commission paid in India will not be forming part of assessable value. You know that. Following additional information is provided. The date of filing of bill of entry 20th May, the rate of exchange 99 rupees per pound, and rate of basic customs duty. Generally, when you are going with the exchange rate, we will take date of filing of bill of entries, exchange rate into picture, and date of arrival of aircraft is 25th May, rate of exchange is 98.5, so this we will not consider. Rate of basic customs duty 10%. Now the point is, sir, exchange rate you will take which is there on the date of filing bill of entry, but you will take this customs duty rate when what is there on date of filing bill of entry or date of arrival of the aircraft, whichever is later. So here filing of bill of entry is 20th May and arrival of aircraft is 25th May. So you will take customs duty rate 10%, basic customs duty rate, integrated tax 12%, insurance premium details not available. If insurance premium details are not available, you will take it as 1.125% of FOB, you know it. Now you are required to compute the customs duty payable. So simple, so 10,000 UK pounds, for that 400 UK pounds we will add again. So 10,400 UK pounds will be the FOB value, and this if you convert at 99 rupees, so how much it is, ma? 10,400 into 99 rupees, so it is 10 lakh 29,600 rupees. Okay, 10 lakh 29,600 rupees. Okay, so for this what we have to do now? So 10 lakh 29,600 rupees. So you have got the cost, correct? And we have to take CIF value, correct? So let us take insurance. Insurance, it is not given. It is 1.125% of FOB. So 10 lakh 29,600 into 1.125%. It is 11,583 rupees. And finally, we have to take CIF. C means cost, I means insurance. Freight it is given. Freight, it is given 3,000 UK pounds. But you know, it cannot be more than 20% of FOB. What is FOB value here? 10,29,600. The 10,29,600 into 20%. It is 2,05,920. Okay, that is what the CIF value. That is what the CIF value. So 2,05,920 plus 10,29,600 plus 11,583. If you see, is 12,47,103 is the assessable value here. Okay. So for this, what we will do, of course, we will take basic customs duty 10%, that is 1247 4 12 lakh 40 1,24,710 rupees will take. On that, social welfare surcharge again 10% on this, 12,471. So total altogether 12 lakh 47 103 plus 12 1,24,710 plus 12,471. So total it is value for IGST, charging IGST, we have to determine value, that is 13,84,284. Okay, on that IGST will be 12%. 12%, it is 166,114. Okay, this is the point. So total taxes if you take, uh, 166,114 plus 1,24,710 plus 12,471. So it is 3,03,295. That will be the answer. Okay, the total taxes here. Okay, so that is what the RTP for you guys. So hope you have enjoyed this RTP discussion. We have just covered it almost in 1 hour span of time, and please understand, make sure you are enjoying your preparation no matter what is the situation. That is what I suggest always. Wishing you all the very best, and I'll be uploading MTPs also in the channel. Please do subscribe and share this to your friends who are studying or preparing for CA final. See you all in another video. Thank you and Jai Hind.